It's a huge week, it's the US that dominates, and it's going to be a big focus across earnings, data, fiscal and geopolitical risks in the US next week.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
So, after some mixed signals in the UK this week, how are we thinking about the growth and inflation dynamic in the UK, and what are we looking for next week?
Yeah, thanks, Matt. Great question. It's been an interesting time for the UK. To close out this week, we've seen retail sales very positive at plus 0.5 for March, expected coming in at minus 0.5. So a positive outturn there, but ultimately we don't see that trajectory as being so positive in the UK in the medium term. On the tariff front, there's no progress so far, although the UK does not run a trade surplus with the US and therefore should be relatively close to the front of the queue for a trade deal, and we'll come back to that potentially a little bit later. What is interesting from the policy perspective, Bailey was on the wires this week being interviewed at the IMF spring meetings. Bailey's view was that tariffs will have a negative effect on growth, that firms will be putting off investment and consumers remain uncertain, and that inflation is much harder to predict. He did emphasise that we are focused on the growth shock, and that's certainly an area in which we see being the dominant driver of monetary policy reaction function in the UK. Now, on the fiscal front, there's also been some progress this week. The data for the past 12 months highlights a deficit of £152 billion. That's £22 billion more than the previous financial year and much, much higher than the OBR forecasts. This brings back into question the fiscal headroom and brings back into focus the prospect of further tax hikes or more fiscal tightening as we move forward towards the April statement. We cover this a little bit more in this week's blog. Next week we get commentary from Sir Dave Ramsden and from Claire Lombardelli on the MPC, and really the focus of the combination of global macro uncertainties and fiscal deterioration is not a comfortable one for the UK, for the pound, and not for the Bank of England. We'll be looking for further evidence as to the Bank of England's policy reaction function next week. And again, we discuss this a little further in this week's blog, but the implications of tighter fiscal policy on the monetary policy trajectory for us lead us to a consideration of significantly lower rates in the UK.
And what about the global economy? Tariff rhetoric may be cooling, but how are we thinking about data and events with respect to the rest of the world next week?
Yeah, absolutely. Some signs, as you say, indeed, of cooling in the tariff escalation or tariff rhetoric, so to speak, with the tentative suggestion of the lowering and also further exemptions in tariffs from both the US and China. Indeed, Treasury Secretary Bessent inferred that we may even see a South Korea-US trade deal as soon as next week. Now, we've seen a significant bounce in global equities and risk assets from the peak tariff escalation repricing and a brief sell America sentiment period that saw US bonds and equities lower. But from our perspective, markets will now increasingly scrutinise the data against what in some global markets are higher equity levels than before the April the 2nd reciprocal tariff announcements. So on the global data front next week, within Europe, on Monday we get German retail sales. On Tuesday we get ECB inflation expectations. On Wednesday, an important German Q1 GDP, certainly in terms of a benchmark or barometer for growth going forward, given the fiscal expansion that has been announced, yet not likely plays a part in the data itself. And then on Friday, we get Eurozone CPI. That's the preliminary print for April. Now, set against that at the IMF meetings this week, we've seen what is a more balanced or perhaps less dovish rhetoric from governing council members, suggesting that perhaps inflation is likely to stabilise around target without further shocks, and that policy already being at neutral may be sufficient. So certainly playing down, therefore, on the emphasis of the need for further rate cuts, and that's again something that we touch on in this week's blog in relation to that fiscal and monetary policy trade-off. In the broader rest of the world, we get Australian CPI for March, on Wednesday. That may be a little retrospective. However, Chinese manufacturing and service sector PMI for April on Wednesday also may be a little bit more poignant. On Friday, we get the Bank of Japan, and after the Tokyo CPI print overnight, the progress towards tighter monetary policy in Japan is still intact. And that's not to mention that Suntory, Japanese whiskey maker, announced price rises of up to 25%. Very concerning for those Japanese whiskey appreciators. So I still think that Japanese rates head higher, but it's more complicated against an uncertain backdrop in the near term. So that global data and European data, very important next week in terms of developments and barometer of sentiment. And it's that global economy and global trade changes that continue to be a big focus for global financial markets.
And as has been the case for many weeks now, however, I suspect it is once again the US that'll dominate. It's a big week across the board for the US this week. So what are the highlights we're looking out for?
Yeah, thanks again, Matt. It's a huge week for the US. On the geopolitical front, we'll be looking for further tariff rhetoric, whether this dialing down of sentiment continues or not. There's certainly some expectation of this trade deal with South Korea. And of course, perhaps closely following behind that, we may see the likes of India, the UK and even Vietnam. So we could certainly see some positives there. On the fiscal front, as we allude to further in this week's blog, the bond market remains very sensitive to concerns about tariff escalation and or fiscal laxity undermining the long end. Last week, Treasury Secretary Bessent reiterated the administration goal of deficit reduction, however, referencing that 3% handle that was part of the campaign messaging. And any progress on that front will be very big in terms of its impact on the US curve. On the data front, we get consumer confidence for April on Thursday, and that's seen some significant declines and is expected to decline further. Very disappointing after the significant rally we saw on the Trump election on the expectation of deregulation. On Wednesday, we get ECI, which is the Fed's preferred measure of employment cost, and that will be a big focus and policy relevant. We also get Q1 advanced GDP. Now, the Atlanta Fed nowcast currently shows expectations adjusted for the gold trade at about minus 0.4. Current market expectations are plus 0.2, and that is significantly down from the 2.4% we saw in Q4 and even higher throughout 2024. So that marked slowdown in US growth will start to become a reality into next week and beyond. On Thursday, we get ISM manufacturing, but in reality, next week is really all about employment. We get JOLTS, ADP, and then on Friday, the non-farm payrolls. It is the number one sensitivity of the FOMC against the current backdrop. The Fed posture is modestly hawkish in its bias at the current juncture, and that's likely as a function of the tariff threat and the need to anchor inflation expectations, especially given the recent bond market wobbles. But this week's data may certainly change that in terms of the Fed's reaction function. We'll be looking out for that very closely. And then lastly, we get earnings from the US. It's a very big week. Some of the highlights being PayPal, Qualcomm, Meta, Microsoft, Apple and Amazon, and even on the consumer front, releases such as Hilton and Booking.com may be interesting to see how that consumer is holding up in the light of this uncertainty. Either way, it's a huge week. It's the US that dominates, and it's going to be a big focus across earnings, data, fiscal and geopolitical risks in the US next week.
Thank you, Neil. That really is a huge amount to look out for in the week ahead. It sounds as though we need a bit of a quieter weekend, though, just to get ourselves ready. I don't think we're going to get a chance, are we?
No luck there, Matthew, I'm afraid. No, it's a very hectic week on the sporting front. We get a full Premiership schedule, and it's a huge weekend for Ipswich, who need a big win away at Newcastle to keep an incredibly unlikely place in the Premiership next season, and for Liverpool, who need a point, just 1 point, at home to Spurs to secure a record 20th league title. Most interestingly, though, in the National League South, all of the top six can still mathematically win the league going into the final game this Saturday afternoon. So fascinating viewing there in the non-league teams. It's also the FA Cup semi-finals, Crystal Palace versus Aston Villa and Forest versus City. So plenty of action in the football. Formula One has a week off between Saudi Arabia and Miami. It's the Eubank versus Ben fight. I remember the original two fights in 1990 and then the repeat in 1993. Makes me feel very old. This time around with their respective sons. It's also World Championship snooker this weekend, starting to heat up with the second round matches. Interestingly, Treasury Secretary Besant's global rebalancing demand didn't include Chinese snooker exports. Some incredible talent coming out of China at the Crucible this week. But for me, it will all be about the London Marathon, cheering on the elite and the not-so-elite runners alike. It should be all great fun.
That is one heck of a weekend ahead. Thank you for joining us and for outlining your thoughts on the week ahead. I look forward to catching up with you next time.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, EurizonSLJCapital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.